Hi guys, welcome to Investing with JYK, and today we'll talk about Sprott Inc. It's a gold and so the reason I'm talking about it and also that I hold is I'm using it as a leveraged play to gold, and there are a couple of ways you can play gold. As one is you get gold itself, or you buy a leverage ETF to gold, or you buy a miner, or you can buy some kind of option on gold, like a call option. So they all have issues. With plain gold, obviously, it doesn't really generate any income. It also, you don't have a leverage to gold. It's just just gold. With a leveraged ETF, you get the decay. So if you get a lot of volatility without the directional move, you will very soon suffer a lot of decay. And in terms of options and miner, they actually behave very similarly. So option will have time value decay. Miners, because a lot of them have a lot of the miners are not money creating things, and then those are the ones with the biggest leverage to gold. So they actually behave very much like options in the sense that they constantly lose value, and when gold goes up quite a bit, they would double or triple or quadruple that move. So yeah, so that's their problem. So they kind of constantly burn money, and then the other, well, this way is, I mean, Sprott is actually very interesting. It actually kind of gets the best of both worlds. Now, Sprott, in terms of what they do, they, let me just find that page. That's too much down. I think it is here. Yeah. So they have some ETFs. They manage some ETFs, and ETFs don't really, there isn't really much to manage for these ETFs. You find a hole, you put your gold in, and that's about it, because that's what they have: physical gold and silver. And they also have some alternative asset management agreement with some people, and they charge a management fee on the asset, also a performance fee. And then they have brokerage deals where they let clients buy and sell stuff, and they get them into private placements and stuff like that, and some random other stuff. But the majority of their income is from fees and commission. So if you look at here, majority of it is management fees and some performance fees, and then they have commission. So let's first talk about commission. So what I found is that these guys' commission is has a very strong positive correlation to gold price volatility. So I first checked whether they have whether they have a correlation to gold price. It doesn't seem like it. And then I thought about it. Yeah, but gold volatility is gonna trigger more trading, because if you think about it, the more volatility there is, the more trading, the more Sprott wins, and that's generally true for all brokerages, I think. So I found the CBOE Gold ETF Volatility Index on Fred, did quarterly, and then I put that into a spreadsheet. Not here, here. Yeah. So these are the quarterly average daily volatilities, and then these are the commissions. And you can see there's a very strong correlation If you do r squared, it's basically something like 6.4, because that's just squaring this, I think. So correlation is very strong. Now the other part is AUM. So AUM is here. Well, AUM is actually not here. I actually didn't collect the AUM. I was looking at the management fee, but AUM is very interesting. It's actually, that's where the leverage comes from, because if you look at gold price did really well, you know, all the way from like 2002 to 2011. And if you look at Sprott, the growth was insane. They were growing like 40% AUM each year. If you look at 2010, oops, 2010, if you look at AUM at December 31st, right? So they increased 80% from the previous year. And if you look at, so that's where the crazy stuff comes from. If you look at their investor relations and financial reports, yeah. 2009, they probably also had a good year. Let's just go to 2009. Remember, 2009 was a shitty year for equities, eh? Uh-oh. AUM at December. So AUM was 4.8, and then before, oh, they actually decreased a well, they actually had a slight increase even in 2009. And then 2011 was another good year, remember, for these guys. So 2011, if you look at the price here, that was the peak. This is the end of 2011. Sorry, beginning of 2011. And this is the peak. So I think 2011, they also had a pretty good year. AUM at December. Yeah, so that was an increase of 7%. But you can see here, I just want a bigger page. It's not very useful. So much lag. Okay, so let's see if we can make this 15 years. Bull market, so that's actually when it ended. So all the way through here, they had pretty good years, and then they kind of stagnated in terms of AUM. Nowadays, in 2017, by end of 2017, AUM was like 9 billion still, and they actually bought something recently. Do we have? Yeah, you can see that their AUM was 7 billion only, and was down 21% from 2016. And before that was $9 billion. So basically, their asset under management is shrinking, and this is after they bought the central fund, the Canadian Central Fund or something. And that happened here. They didn't buy it. This year they did. Yeah, so by this year, the AUM went back to something like $9 billion, I think. Let's look at the recent one. Yeah, $10 billion. 10.01 billion dollars. So one thing you might have noticed that they actually pay a 5% dividend, and you may ask how reliable is that dividend? And actually the dividend is quite reliable. They seem to have a schedule of paying 30 Canadian cents every year, or every quarter, and they've been paying that very consistently. And then in the good years, they pay like ginormous special dividends. So if you look at 5 year, it's basically flat. There's some fluctuations, but that's due to currency translation. This is a Canadian company. This is US ADR. So, all right. And the other thing that I looked at was numbers. So as I mentioned before, if you think about a gold hedge, you have certain options. Now, one is buying gold itself. You would have had 10% return since 2010, February 2010. Reason I picked February, that's when the ADR became tradable for Sprott. Or you can buy Sprott, which would net you a 35% loss, including dividend. Now, I'm not too worried about this because 2010 was still in a good year when Sprott was growing like crazy. When Sprott is growing like crazy and you buy in, it's very likely you're gonna lose money, and this is because it is in the end a cyclical company that has a leverage on gold. And if you look at Barrick, you would have lost 60%. Newmont, slightly better, 17%. You've done very well for Franco-Nevada. But then if you look at Franco-Nevada, it's actually very weird. It's a gold company, but it has a negative correlation to gold. That's very interesting. Yeah, and also Franco-Nevada is very expensive. So Franco-Nevada behaves a lot more like equity than gold equity, and it trades like a growth stock at like 50, 60 PE or something. So it's kind of crazy. And the other thing is, if you bought Sprott, oh, and this is correlation. Yeah, so Sprott has the same amount of correlation to gold as Newmont, basically, slightly less than Barrick. And if you think about it, the best time to buy Sprott is really when gold is pretty low. So 14, 15, 16 should be okay. So if we look at, and the reason is that if you look at gold price, you can see as soon as it drops off this cliff, you should be okay. So anything down here is okay. So let's check 14. I haven't checked this before, so let's look at it. So if we go to 14, 2014, just say mid-year 14, something like that. All right, so that would be 1,078. See how things are. One thousand 1,178. Oh, 1,000, something like that. So gold has been flat since then. And if we pull this over, it wasn't doing. I probably should check the valuation on this stuff. Let's check some other dates. See, because this thing is actually not that expensive. It's close to 1 PB. So let's say maybe beginning of 2016 or something. Beginning of 2016. Where do we have it? So 1479. 1479. Okay, so gold has increased by 10%. ABX 1.8, Newmont 1.9. So yeah, so that's when these were really cheap, I think. And Sprott's increased by 23%, so slightly better than gold, and Franco Nevada's 60% since then. And the other thing I was looking at is if you just look at the graph, right? So if you look at finance.google.com. Sprott, let's just do SPOXF. And you can compare this to GLD. Let's do max. You can see this increase was extremely dramatic, and I think the Sprott kind of bottomed at here. And it's been just going flat since. This does not include dividend, by the way. So from here all the way, you've been getting 5% all the time. And this bump is when they purchased the Canadian Central Fund or something, Central Canadian Fund, I think. So another gold ETF, basically, ETF manager. They absorbed all that asset. So yeah, so but if you had some miners since this time period, maybe like July of 2016, you may have lost money, I think. So let's just take a look, because this is when gold was on its temporary high, July 15th. Let's see. Somewhere here, the temporary high. Yeah, so 1609, 1610. Let's just make a change here. 1610, gold has lost a little bit of money, and Sprott has made a little bit of money, and the miners have lost a bit of money since. So yeah, so when Sprott is cheap, especially in the past couple of years, they have been this consistent cash generator. So they don't provide much gain, and there is no excitement at all about Sprott when, if you look at this graph, basically when gold price went quite high, it didn't actually fall. So it was kind of really, people were really bored with Sprott, I think, and so they actually held pretty well. This was, I think, this was when they went really low in beginning of 2016. Okay. Well, anyway, so in terms of earnings, it's somewhat. Let's just look at the value graph. So in terms of PE, it's not very stable. It can sometimes jump to sometimes it will lose money. And in terms of PB, which I think is a slightly better way of valuing this stock, because the book value actually doesn't change much. The earning power changes a lot. Close to 1 or 1.5, you seem to do fine. And back then, I don't have data back then, but I'm sure back then PB was really, really high, because Sprott was extremely profitable. I remember in 2010 they were making like 80 cents or something per share. Now they make 16 cents per share. Is it constantly decreasing? No, they just been flat ever since like 14. Well, it's not a very strong stock pick from my perspective, but this is, from my perspective, a good way to premium. You're paying 1.5 PB, you get your 5% dividend, and you kind of hold and wait. And my plan is to add a bit more when, actually I want to add a bit more now because the dividend has already, dividend yield has already went above 5%, and PB is 1.5 already. So, all right, and that's it for today. And yeah, it's not a very strong pick. So dislike if you dislike, and see